Hello students, I am Dr. Nitin Kumar Agarwal, Associate Professor at Timid College, Moradabad, and I extend my heartiest welcome to you all to today's session based on the financial accounting. The topic which would be covered in today's session is the trial balance. As you know that trial balance is a very important statement in order to prepare the financial statement at the end of the year. So how to prepare trial balance today you would be knowing about that. There are some methods. So according to the method of trial balance you have to record, you have to prepare this particular statement. And it is very important to know that trial balance is having its own significance because in order to ensure the accuracy of the ledger posting, if you are recording the business transaction in the ledger through journal entries, so maybe there is a chance to make some error. So in order to ensure the arithmetic error, to ensure that you avoid the arithmetic error in your ledger posting, you need to check it, and through trial balance you can know that exactly what is the particular error. And because there are some errors which are not disclosed by the trial balance, so it is very important for the students that they prepare their journal and ledger posting very accurately and effectively, right? So today's topic would be covered, and this is the time to attempt a question so that practically you know how to prepare the trial balance. Okay, so there are some transactions, and first of all, we have to make these transactions in the form of the journal entries in journal. So first transaction is on April 1st, right? So April 1st, there is a transaction that commenced business with cash. So cash account debit and to capital account, and the narration is business commenced with cash, and you have to mention the amount rupees 1 lakh. And on 2nd April, another transaction, you find that open a bank account and deposit cash rupees 50,000. So bank account debit to cash account, right? And narration would be that deposited cash into bank, and what is the amount? Rupees 50,000 in the debit side and 50,000 in the credit side as well, right? And on 3rd April, there is another transaction, purchase goods for cash. This is the cash transaction. So purchase account debit to cash account, and narration is goods purchased for cash, right? Rupees 20,000. And on 4th April, the next transaction is purchase goods on credit from Mr. A, as the party name is mentioned in the question. So this is the particular case of credit, and already the credit term is given to you, right? So purchase account debit to Mr. A, because the party name is mentioned. So this is the credit transaction, and goods purchased on credit, and the amount is rupees 15,000, rupees 15,000. And on 5th April, as you see, another transaction is sold goods for cash. So cash account debit to sales account, and the narration is goods sold for cash, and the amount is 10,000, right? On 6th April, The another transaction is sold goods on credit to Mr. B, then Mr. B would be debit in this case, and to sales account, and narration is goods sold on credit. And what is the particular amount of this transaction? Rupees 5,000. And on 7th April, the transaction paid rent by check. As you are paying the rent, right, by a check, you are issuing a check. So this is the bank transaction. Bank balance is reduced. So you have to enter this particular entry in your journal very carefully, because the expenses is paid by check. You have to mention to bank account, and narration would be that rent paid by check. And what is the amount? Rupees 2000, rupees 2000. Next transaction on 8 April is that paid salaries in cash. So salaries account debit to cash account, salaries paid rupees 3000. On 9th April, another transaction is that received commission. So this is the business transaction and you are receiving the income. So income would be credit as per the entries rules, and cash account would be debit. To commission account, and narration would be commission received rupees 1000. And on 10th April, you find another transaction with do cash for personal use. So if you see there is a particular case of personal use, it means you are withdrawing the money for your personal use from the business. So capital is reduced in the form of drawings. So drawings account would be mentioned. And because you are withdrawing the cash, cash balance is reduced to cash account. Withdrew cash for personal use, it means the drawing, and the amount is rupees 2000. In both the column you have to mention rupees 2000, right? So we are complete with the transactions entered in the journal. So general entries are there, right? And with the help of these general entries you have to maintain the ledger. So the very first thing is, when you are going to prepare the ledger, that you have to open all the accounts which are needed as per the general entries. So cash, capital, bank, purchase, right, and sales. So this is the ledger, and you have to open cash account, right, and you have to open bank account, capital account, and purchase account, and bank account. Okay, and again you can see, going to the question and general entries, that cash, capital, bank, purchase. You don't make twice the purchase account, because two times is given to you this particular entry, cash transaction and the credit transaction. but in the single lasers account you have to post these entries, right? So purchase account already we have prepared purchase account, and Mr. A and Mr. B account, and rent and salaries account. Mr. A account, Mr. B account, and rent account and salaries account, right? Going back to the question. So first check that cash, capital, bank purchase, sales, B, rent, salaries. Okay, and right, and commission and drawing account you have to open. So commission account and drawing account, right? Commission account and drawings account. Okay, so all the accounts as per the requirements you have to maintain in the ledger, right? And now come to the general entries of very first. Okay, just we remove these extra lines. Okay, so first entry is cash to capital rupees 1 lakh. So you have to mention in the debit side of cash account to capital account rupees 1 lakh, right? And in the capital account in credit side you have to mention by cash account, and amount is rupees 1 lakh, right? Both the side, because there are two accounts. Okay, and second entry is bank account debit to cash account rupees 50,000. So in the bank account you have to mention to cash account, and amount is rupees 50,000, and in the cash in credit side you have to mention by bank account rupees 50,000. And you see third transaction, that is purchase account debit to cash 20,000. So purchase account to cash account 20,000, and in the cash account debit side credit side by purchase account, that is 20,000. And fourth transaction is purchase account debit to Mr. A 15,000, to Mr. A 15,000, and Mr. A account as you are maintaining in the ledger. So by purchase account rupees 15,000, right? And now the next transaction in the journal entry is cash account debit to sales account 10,000. So in the cash account to sales account, amount is 10,000, and in the sales account you have to mention, I think sales account is not open, so we have to mention Once again we check we have prepared the sales account or not. Oh, no, we have not opened the sales account, right? So sales account would be open there. Right. And what is the transaction of sales? That cash account debit to sales 10,000. So already you have mentioned in the cash account 10,000, and now in the sales account by cash account 10,000 would be mentioned in the credit side. Okay. Next transaction is, I'm not mentioning the date over here, right? Because the purpose is to make you learn about the trial balance. So right now I am just give you the revision, the quick revision. So I am not mentioning the dates in the laser posting, right? You can mention, and we are posting the journal entries into the laser right now. So on the 6th April transaction, there is a Mr. B debit to sales account. So Mr. B to sales, what is the amount? Okay, go back. Mr. B 5,000, right? So Mr. B to sales account 5,000, right? And in the sales account by Mr. B 5,000, right? And another transaction is rent account debit to bank account, and at the same time we should check the amount 2,000, rent debit to bank 2,000. Okay, in the rent account, right? Not bank, rent account, right? Okay, just remove it. In the credit side, you have to mention by rent because bank balance is reduced, right? Again, back to the question that rent account is there, rent account debit to bank 2,000, rent account debit to bank 2,000. Now we approach to rent account to bank account, okay, and the amount is 2,000, right? And next transaction, salaries to cash 3,000, and salary account, right? Salary debit to cash 3,000, right? And on April 9, you see that there is a transaction cash account debit to commission 1,000, cash account debit to commission account, that is 1,000, and in the commission account you have to write by cash 1,000, by cash account rupees 1000. Okay, and the last transaction which is to be posted in the ledger is drawing account debit to cash. So in the cash by drawings account, right, cash is reduced, so in the credit side you have to mention this particular amount with rupees 2000, and in the debit side of drawings, to cash account rupees 2000. Okay, so there is a particular entries, and you have mentioned the accounts. There is no need of this particular format. So extra account which are open we are deleting. Right. So you are prepared already with your journal entries and ledger. So in order to prepare your trial balance, first of all, you have to close every account and extract the balance from the ledgers, right? Because the trial balance is the summary of balances taken from the ledger. So you have to collect those balances of the ledger account. So each account would be closed, right? So how to close? The very first thing is that you have to take the total, but you have to have an idea that what side is having the highest total, so that you have to calculate the balance, right? So here is the total of this particular amount, rupees 1 lakh. Okay, manually we take it, rupees 1 lakh 11,000. Right, and here 75,000. So this particular total of the debit side would be the same in the credit side, 1 lakh 11,000, and you just take the calculation that 1 lakh 11,000 minus 70, so you find 36,000. So this is the balance by balance CD, right, rupees 36,000. So this is the total. Okay, and this is the balance, and we just make it dark so we can identify this is the total, right? And balance is rupees 36,000. Okay, okay, we just give a form and make it bold, 36,000. So this is the particular balance of cash account, right? And now we have to close this particular account, because in the single side there is a particular amount, so the same amount would be written over there, rupees 1 lakh, and the balance would be rupees 1 lakh to balance CD, right? So this is the total, and you have to carry this particular balance in the opposite side, that is credit side. So by balance BD, it is again rupees 1 lakh, right? Now we have to close this purchase account, 35,000 is the total, and same amount would be here 35,000, and the balance would be 35,000. So you have to mention by balance CD, and in the opposite side you have to mention to balance brought down rupees 35,000 itself. And in the bank account, as you see that there are two amounts in the debit and credit, so we have to take the total of the highest of the side having the highest amount. So 50,000 is the highest amount in the debit side, so same amount would be written over there in the credit side, and you take the balance rupees 48,000 by mentioning by balance CD, and in the debit side you have to mention that to balance BD brought down rupees 48,000, right? And this is the total. So we close this account and extract, right, the balance, and A's account would be closed by 15,000, and again 15,000, and again 15,000, and to balance CD, and by balance brought down, right, rupees 15,000, and this is the total. Right, you have to close this particular amount, that is the B account, with amount rupees 5,000, and same total would be written over there 5,000, and the balance is 5,000 by balance CD, right, and to balance BD. In the rent account, 2,000, 2,000, 2,000, and by balance CD, and to balance BD, amount is 2,000, right? And okay, just make it dark, bold, so that you identify this is the total in the account, right? This is the total of this account. Okay, so you are extracting the balances of different accounts, right? Again, this account of salary would be closed with rupees 3,000, rupees 3,000, and balance would be 3,000 by balance CD, and to balance BD rupees 3,000, and we make it bold. Okay, and in the commission account there is the credit amount rupees 1,000, so we take the total of rupees 1,000, and the balance would be rupees 1,000 to balance CD, and we just bold it. And in the credit side you have to write by balance BD rupees 1,000, and now two accounts are left, so we have to close these accounts as well, 2,000 and 2,000, right? And balance would be 2000 by balance CD and 2 balance BD 2000. Okay, so you have to close every account in this particular manner, right? Again, this account 15,000 is the total. Same total would be written the opposite side, and there is no amount to be subtracted out of this total, so you have to mention 15,000 as the balance of this account. So to balance CD 15,000 and by balance BD 15,000. Right. So every account you closed by taking and you extracted the balances, right? In this account you have to mention two balance brought down rupees 36,000. Okay. Now this is the time to go to the trial balance, and you have to mention every balance in the trial balance. As you can see, this is the format. So today's topic, that is very important topic of the primary books. It means at the initial stage when you enter the business transactions in the journal entries and you prepare the ledger, as you had the experience with me today itself, and now this is the right time to prepare the trial balance with the help of the balances extracted from the ledgers. So first of all, the name of accounts you have to mention here. So how many accounts were prepared, right? Each and every name of the account would be written over there. So first is cash account, capital, cash capital, purchase and bank. Okay, so cash account, capital account, bank account, and purchase account, right? Go back, and very carefully every account name is to be mentioned in the trial balance, and already we have given some names, right? We check it that cash account is there. Okay, the first account is cash, then capital, then purchase, then bank, again A's account, B's account, A, B, rent, salary and commission, Mr. A account, Mr. B's account, and rent account, and salaries account, and commission account, and drawings account, right? So you can count that how many accounts are there: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, just go to the ledger and check it whether all the account names have been mentioned or not. You have to ensure first, right? So cash account, capital account 2, purchase account 3, bank account 4, then 5, 6, 7, 8, 9, and 10, right? All the accounts have been mentioned or not? Your sales account, right? So sales account you have to mention. Okay, and now this is the time to take the balances of or to carry the balances to the trial balance from ledgers, right? So what are the balances? The very first cash account 36,000 and capital 1 lakh. Cash account is the debit 36,000, so debit balance is there 36,000, right? 36,000, and capital account credit balance is given rupees 1 lakh. You have to be very conscious when you are carrying the balances, because if the debit balance is there in a particular account, you have to make that particular account debit, or you have to write the debit balance in the debit side of trial balance. Okay, so as you see that cash balance is the debit side, so we made this particular balance in the debit side of trial balance. And capital account, you see here that cash by balance BD. So whatever the balance is brought down, so this particular amount would be carried down, right, in the trial balance, or written down in the trial balance. So capital account was credit, that's why we mention in the credit side of the trial balance. And purchase account, you see that debit balance of 35,000, so in the purchase account we have to mention 35,000 in the debit side, right? Okay, bank account was left, so what is the balance of bank account? We check it. Yes, bank account is 48,000 debit balance, so we have to mention 48,000, right? And Mr. A account, right, we check it. Mr. A account credit balance 15,000, and B's account 5,000 debit balance. Mr. A 15,000 credit balance, and Mr. B 5,000 debit balance. And rent and commission, okay, rent is 2,000, salaries is 3,000, debit balances. Rent is 2,000 and salaries 3,000, debit balances. And commission drawing sales, so commission credit 1,000, okay, 1,000, and drawing is rupees 2,000 debit balance, so drawing rupees 2,000 debit balance. And what about the sales? Credit balance 15,000, okay, we have to mention 15,000 credit balance. Okay, so now you have to take the total of both the side, right? So this is the particular debit side, we have the total of this 1,31,000. If the total of credit side is 1,31,000, the trial balance would be assumed balanced trial balance, right? It means it matches with the debit and credit. Both the debit side and credit sides are equal, so uh, it will ensure that in the ledger posting we left no any error. And if there is a discrepancy, there is a particular difference, right? So it would be assumed that any error was left when you were posting the entries into the ledger from general entries, right? So we have to take the total, and I think you are having the tingling in your stomach that exactly there is a match of this trial balance or not. So we just have the total, right, of credit side also. And as you see, yes, we find it, and we are successful by for this particular trial balance. As you see that the both sides are matched with the equal balance rupees 1,31,000. So this is the particular trial balance, and you would be happy when you would be preparing the trial balance and you have the equal balances in both the side, debit and credit, because you are successful, you would be having the success, right? So on the basis of the trial balance, you would be preparing the financial statement at the end of the year, right? So in the next lecture, no doubt, a few other problems of the trial balance will be discussed. So this is very, very important to know that the journal entries should be entered into the books of journal very carefully, because if any particular entry is missing or is left, or there is a particular error of omission, so that time the trial balance will have no effect, and it will not disclose that particular error, or the different types of the errors are there that the trial balance is not disclosing. So you have to be very careful when you are writing the books of accounting. So when the transactions are posted into the ledger, again there is a case that you are making some errors, and if those errors which are of such kind that the trial balance will not disclose, so you have to be very careful when you are writing the ledger books or you are posting the entries into the ledger, right? So I think today's session is fruitful for you, and you take away this particular lesson, that how to prepare, you have the skill to prepare the trial balance. Thank you very much.